what's really clever about what Satoshi did is he took these old technologies like the Merkle tree, SHA 256 decentralized networks, and Hashcash, which had his birth over here at MIT, but I believe Adam was here. These are old technologies, but he sort of bundled them together to solve an interesting problem. So with this consensus, he created a way for a group of people to actually concur that the transaction was valid. So it was an open network and doesn't require any trust or permission. And then he layered on top of it this economic layer that actually helped distribute Bitcoin as a reward for people who were building out this distributed ledger. And so as a result of that, I actually say that Bitcoin has actually built one of the largest financial applications. It's distributed all over the world. It's probably been tested more than a lot of financial apps that are behind firewalls and never see the light of day. Only the permissioned people are allowed to touch them. And so because this is about economics, I thought I would just quickly go through the economics of transactions. I mean, obviously, these are some obvious ones. I mean, banking is interesting because you have 2 billion people that are unbanked. That number's gone down in the past year by 20%. 77% of those people only make less than $2 a day. What's interesting is that 75% of those people claim that things like documents and distance, trust are some of the issues that prevent them from actually having a bank account. I'm actually going to argue that maybe it's not so important because you have relationships with other mechanisms like mobile that may be more important. Remittances are really important, and although it's a $4 trillion business, you have about 583 billion of them are cross-border, and of that number, 436 billion of them go to developing countries. The reason why that's important is that that number represents 3 times what world aid is, right? So this money actually helps people in these countries actually pay for education, it brings them above the poverty level, it helps them with health care, and most of those transactions are under $1,000. And so those are the people who pay the highest commissions when they're sending that money over. So if you could decrease that by 5%, that's $16 billion, and that really matters. Third-party payments, I'm sure you all have Visa or MasterCards in your pocket, so we don't have to go into that, and the personally identifiable information that's been stolen out of databases. Mobile banking, that's my favorite. And the reason is because I believe that people have a stronger relationship with their mobile phone than they do with their bank. And I'll get into it a little bit, but of course you have M-Pesa in Kenya. Have you guys heard of M-Pesa in Kenya? Very successful. It came from trading mobile minutes as cash. I think there was a statistic, 97% of the people in Kenya had actually used M-Pesa, and it has 40-50% of the GDP. But my last point there is that in using blockchain, one of the things that we think about, these business efficiencies that come about require that business processes be changed. And that's a big thing because these large organizations, these stakeholders in these traditional organizations would have to change their business models. More importantly, compliance, because this is actually one of the most highly regulated industries. I mean, the media industry back in the 90s wasn't that regulated, so you didn't have to worry about that when you were disrupting that one. And then the self-service models, the customer self-service models are going to change drastically as well. So I wanted to show you quickly, and I think Michael's going to talk a little bit more on some aspects of this, but I just wanted to put this slide up because I got this from the World Bank. And the green areas represent the highly banked areas, and there are areas like Brazil, Russia, and South China that actually have improved significantly over the course of the last 4 years. But of those 2 billion unbanked people, 50% of them have mobile phones. So that's back to my point that maybe having a mobile phone is more important than having a bank account, and it's not quite as regulated, but I'll just leave that out there. And this is another slide that shows the volume of those remittances. I talked about how important they were. And you can see the volume coming from the United States, going to these developing countries. It makes a huge difference for these countries when the recipients in these third world countries receive this cash. So kind of back to my feeling about mobile phones, because I actually believe that your relationship with your mobile phone when you have a bank account is even more important. I did some work in Mexico with Carlos Slim's organization. They have one of the largest phone companies. And one of the things that their team told me was that they were proud of the fact that as a country, they spend the largest percentage of their their salary on their communications on their phone. That's a big data point there, right? And so I won't get into the details of this, but if you're banked, you can do a lot of different things with bank accounts and cards. But if you're unbanked, if you looked at the source of funds, you realize that in that column, below the red line, the source of funds is not from a bank account. So your mobile phone starts opening up some opportunities. And so once again, you have 7.4 billion people in the world, and you have 7.5 billion mobile phone subscriptions, and that number is going to go up to 9 billion. So, this matters. It actually, Africa has doubled in the past 5 years. Quickly, I just borrowed these slides for some people, just to show you some data points. Number of merchants is up by 42%. The number of ATMs, 13%. The mobile banking, if you look at that chart over there, the United States isn't even in the first third of the chart. You've got China and South Africa have the highest penetration of people using their mobile phones for banking. Okay, so this is an interesting slide, and I won't go into too much detail, but as I said before, finance is probably the most highly regulated industry. And so in terms of coming in and just stepping in and disrupting it, it's a little bit of a challenge because there's all these regulatory issues. And so in Europe, they consider Bitcoin a currency, so there's no VAT tax. But in the United States, the federal government considers it a property, which is different. And then if you're going to set up business, they're all different kinds of licensing requirements. I mean, red means that you need a license, but the definition for what a license is kind of differs in terms of what type of work you're doing. And so here's a chart of all the different things that you could do with blockchain. I'm not going to go into it. I mean, the print is too small to even read it from here, but my whole point is there's so much that could be done specifically with the blockchain below the Bitcoin. As I said before, I think that the Bitcoin application had this magical quality that allowed for this distributed ledger to be spread all over the world and tested and kicked around. And then I showed you a slide that had all the different layers in it. In terms of the components, I think that a lot of the applications you're hearing about in the financial space, they've taken the consensus piece out and changed that because it takes up too much energy, and because they're in a private internet environment, they don't really need that. So now that it's been proven, some of these parts will change a bit, but there's so many applications from the Internet of Things to human genome. I mean, there's just lots of different applications. So I actually like to think about the blockchain as peer-to-peer decentralized transactions sort of as a fourth type of marketplace. You have your traditional marketplaces that everybody's familiar with. You had the internet marketplaces, which had a certain level of disintermediation. Then, of course, there's the shared economy, the Ubers of the world, or Fiverr is my favorite. It's a marketplace for creative services. But the peer-to-peer transaction is frictionless, efficient. New business processes, incumbents will resist, and new entrants will disrupt. So this is my last slide, but I just wanted to show the green part, the sort of yellow part represents 66% of the investment is in the Bitcoin space. And the gray, which is 20%, is the blockchain, which I think is the most fascinating part of this new wave of technology. And there's a hybrid component as well, which I talked about, those layers. Now that this has been proven, there's this hybrid capability in which you can come in and swap some pieces out but still use components of this technology. And so with that, I'm going to leave you with this slide. It gives you some numbers. Some of them might even be outdated. I think there's actually more financial institutions. But so I leave you with this slide. And with that, I introduce Michael to come and speak.